Hello and welcome to another Major Market Movements End of the Week Market Review for September 18th, 2015. I'm Quad G, and in this video we're covering the Forex markets, starting off with the US dollar. This is a 1 hour chart, wanted to point out here what I see taking place. First off, this move down from 96.60, this first part is just very choppy, not sure what to make of that. It's not impulsive. And then we got a three-way move to the upside, looks corrective, and then a nice impulse to the downside. 1, 2, 3, 4, 5. And then this other move that looked like it was also impulsive. 1, 2, 3, 4, 5. And a tapering move. But that got washed out with another impulsive move. 1, 2, 3, 4, 5 to the downside. And we finish off this week with another sharp, impulsive move to the upside. This whole move is just really bizarre. It just got overlapping and five-way moves back and forth. It's just a nightmare as far as LA wave counting is concerned. For now, I'm just taking a very simple approach using some basic TA and relying upon right now the last swing high, which is up here at about 95.85 for now. I think we're still potentially bearish while below that level. The QG3 is still in a bearish alignment to the downside. The week closes as a negative spinning top. It's just very neutral. Nothing to see on the EWO. Very neutral on the RSI. MACD daily is open to the downside. And on the weekly, open to the downside as well, so that's bearish. So overall picture, I still lean towards some bearishness, but it all hinges on that last swing high at 95.85. Let's look at USD JPY. So we had that triangle pattern. Let's move it out to that pattern. So we got this A, B, C, D, E type pattern, which is what I was relying upon for the short, and that really all started right back here at 121. But so far, down out of this suspected wave E, we've got this three-wave move. It doesn't look terribly impulsive, so I'm really not sure what this market's doing here. It's not very clean and clear. The QG3 is in a neutral alignment here. Almost all the everything's really tight together there, close to the 20 DMA. You see that the price also closes very close to the 20 DMA. So there's not a lot of risk either way in this market taking place. Bollinger Bands are pinching in, so energy is building up, but we don't have any firm direction just yet. The week does close as this is an inside negative week, so it's neutral. Nothing to show you there on the EWO, RSI, parked in the middle between 40 and 60. Again, nothing to show you. The MACD is open to the upside, that's bullish. However, the MACD on the weekly is open to the downside, so that's bearish. So mixed picture. Again, just looking heavily neutral right now for USD JPY. Let's take a look at the euro. All right, so the euro still technically in an uptrend. You've got higher highs and higher lows so far while you're above this last swing low at 121.14. So again, not sure what this market's up to, but we'll stick with the uptrend as long as it stays above this last swing low, much like inversely as what's taking place in USD. The QG3 is in a bullish alignment to the upside. The 10 EMA is just over the 20 DMA, just slightly. The weekly, again, just the inside, or not inside, the spinning top, excuse me, candlestick pattern. So really very neutral, nothing to show you. EWO, very solidly neutral. RSI, neutral. MACD, neutral. The weekly is bullish. So very neutral picture for the euro right now as well. All right, let's move on to the Elliott wave charts. All right, so here's US dollar. I wanted to point out just the basics of trend following and what to pay attention to, and why, this is very rudimentary stuff, but it's very important stuff and stuff that you don't want to forget or take for granted. And it's easy to lose sight of where you are in a trend if you're not paying attention to where all your swings are, all your important swings. So I just wanted to point out that U.S. dollar was moving up here, and then we had a swing low, we had a swing high, and then we had a drop down that broke the last swing low. So we have a new established downtrend with a new lower low. We popped up into a lower high, and then we dropped again to a lower low. So this is all a downtrend. And technically we're still in a downtrend because the last swing high was way up here. Right at the high was at 97.07. And so far this bounce up has come up, retraced most of this leg down. However, it stalled and reversed just underneath that 97.07. So technically we're still in a downtrend from all the way back up here at 98.32. And if we look into it a little bit closer in the smaller swings, you can see that from this last swing low, here we did get a pop up. We got a higher low here. We got a higher high, and all things could have been going bullish if we had just taken out that 97.07 level, but it couldn't do it. Turned right back down. It made a lower low underneath this last swing low, popped up lower high underneath the last swing high, and then yet another lower low. So overall picture, considering everything here, it all comes back to 95.84. We're still in a downtrend and could be still in a major downtrend, a larger downtrend, while we're below that 95.84 level. So here's one Elliott wave pattern that I'm toying with. Not overly confident with this count, but we'll work it for now. And the idea being that we've got potential double zigzag to the downside with the ABC completed. This could have been a wave X up here, and now we're working on a second zigzag to the downside as part of what could be a larger bull flag in the work for US dollar. And a shot up testing this upper blue trend line. That would be a potential rule of 4 breakout to the upside if that was to take place. And that would be just about perfect for a bullish flag here. All right, so we've got this bullish expanding wedge here, and it was moving along pretty much as expected, except we stalled. If we didn't complete this particular run, didn't come all the way up and retest this trend line. It stalled partway in between here and doubled back. So this is potentially a bearish development here, with not being able to reach up entirely to the upper trend line before dropping back down. So if this continues and we see a challenge or exceed this lower trend line, that's going to tell me that this expanding wedge pattern is done, and we could see some stronger selling thereafter. So this trend line is also very key, along with this last swing low. See, either of those two is broken, then the uptrend is done, and we could see a stronger move to the downside. Here's USD/JPY. Here's the count that I'm preferring at this point in time. It looks to me as though we've got wave A, wave B, which is a flat, wave C, pop up into a long contracting triangle count for wave X, A, B, C, D, E. It's darn near picture perfect there. And then we got this drop down, which isn't terribly impulsive. I would have preferred an impulsive move down underneath wave D, but we didn't get it. So this kind of, I'm very curious about that. Not still bearish, but not as clean as I would have liked it. So still going into this very cautiously. But if this remains true, we could see continued move to the downside into wave A, pop into B, and then another leg down into C to complete the double zigzag to the downside. Now there is another way of counting this that isn't half bad, and that is we've got wave 1 here, wave 2 flat, wave 3, wave 4 sharp, and now because of all this choppiness, we basically have to break up the triangle count and start the components of a inning diagonal count to the downside, which is a move that has 5 sets of 3 waves. So we got the first 3-wave move down for wave 1. We got a 3-wave move sideways for a flat wave 2. That makes sense. So the next expectation for this particular count would be a 3-wave move down into wave 3, and then a 3-wave move up for a sharp wave 4, and then one more 3-wave move to the downside for 5 of 5 to complete the diagonal pattern of an initial impulse to the downside. Okay, so either one of those counts is valid. Both counts are bearish, and both counts are heavily dependent on keeping below 121. So no matter how you slice it, sometimes the Elliott wave counts do coincide with one another, and we can take all the time in the world later on to decipher exactly what kind of downtrend we've got here on as far as Elliott wave is concerned. So not really sweating the future details yet while we're below 121. It's really just that simple. Okay, so I'm going to say that's our conclusion of the Forex end of the week market review. So I hope you all have a great weekend, and I'll talk to you later. Adios.